Hi, my name is Carla Calderera, co-founder and managing partner of Upfront CPA. And today I'm going to speak to you about a very important topic because there are tax deadlines that are coming up in the next few months. And whether you own a business or if you are an individual and you filed an extension back in March or in April, you have to know these deadlines that are coming up and you have to take action today. So let's start with the first one. Remember, first of all, before we start with the actual deadlines, that an extension gives you an additional time to file, not to pay the taxes that you owe. So, again, it does not give you additional time to pay for your taxes. Therefore, if you owe taxes for 2025 at this and you haven't paid for them, at this time you are accruing penalties and interest. FYI. That's why if you filed an extension, you have to make sure that you file before these deadlines that I'm going to speak to you about so that you can, and you should make the payment definitely if you do owe money and if you do owe taxes. Therefore, you stop accruing those interest and penalties. So, first deadline coming up. Let's start with two very important days that you need to know. September 15th. September 15th is if you filed an extension, if you own an S corporation or a partnership and you filed an extension at the beginning of the year, the deadline to file those tax returns are coming up on September 15th. That means that Forms 1120S and Form 1065 have to be filed by September 15th. This deadline is particularly important because those returns generate a K1 that you need to in order to complete your personal tax returns. And when is the deadline for the personal tax returns if you filed an extension? It's October 15th. So again, for individuals who filed an extension, October 15th is the deadline to file those personal tax returns. And for most calendar year, if you're a C corporation with a calendar year, if you're a calendar year C corporation, October, and you filed an extension, October 15th is also your deadline to file for the C Corp, and that's Form 1120. There is something again that I want to emphasize because this is very important. An extension to file is not an extension to pay. So if you owe taxes for 2025, again, those taxes generally should have been paid by the due date. Okay, so April 15th. If you owe taxes for 2025, that you should have made an estimated payment for 2025 or a safe harbor to avoid some of the penalties. But again, even if you filed an extension, if you know, for example, that you are going to owe taxes, we recommend our clients to make an estimated tax payment along with the extension. That way you stop, again, accruing for penalties and interest. And if you overpay, if that estimated payment is actually higher than the tax that are due, then you will get a refund. Or if your tax liability is actually higher than the estimated payments, then you pay the difference when you file the tax returns now coming up. Again, so if you are waiting until September or October 2026 to file 2025 tax returns, you may have already penalties and interest accruing. So, what happens if you miss the deadline? It depends on the type of return. For individual or C corporations with tax due, again, you can potentially have a failure to file penalty. You have a failure to pay penalty. And again, the interest, you're accruing interest of the balance that you owe. So the longer that balance rests unpaid, the more expensive the problem can become. So S corporations and partnerships are a little different because those entities do not generally pay and taxes on the tax return. They produce a K1, and that K1 is filed or is processed with the personal tax returns. So late S corporation and partnership returns can generate penalties based on the number of shareholders or partners and the number of months the return is late. So always, please, if you file an extension, filing an extension, just to be clear, there's nothing wrong with that. You can definitely file an extension because it's better for you to make sure that your tax returns get done correctly, that your prior year is closed, that all your accounts are reconciled. It's better to file an extension but file correct tax returns than to rush and file and then have to go back to fix something and then file an amendment. So, again, filing an extension, there's nothing wrong with it. It's completely legal. You have 6 months after the extension to file, which is the deadline that is coming up. But again, if you know that you will have a tax liability, if you know that you have to pay taxes this year, then an estimated payment should have been made when you filed the extension. Again, there's another consequence that business owners don't always think about. When your business tax return is late, your K1 is late. And when your K1 is late, your personal return may be delayed. And now it's one missed deadline that starts affecting everything else. So if you can avoid it, please file your S corporation Form 1120S or if you're a partnership Form 1065. Make sure that you file on time by September 15th. And again, individual tax returns or C corporations that have a calendar year, October 15th. Now, let's talk about something a little bit. It's another deadline that is coming up, but it's very important. Again, we are currently talking about filing tax returns for prior year, but you should know, and if you don't know this, please put this in top of your mind. You are supposed to pay your taxes throughout the year. And therefore, if you own a business and you are not paying yourself through a W-2, for example, which you are already prepaying for your payroll taxes and your federal income taxes, then you should make an estimated payments quarterly. And again, if you feel depending on the projections for your business, how things are going, if you feel like what is being withheld from your paycheck and you know you're going to most likely owe taxes, and again, we're talking about 2026, then you should definitely be making estimated or additional tax payments throughout the year. Those estimated tax payments, they have deadlines as well. They have the deadline is March 15th, June 15th, and the next deadline that is coming up for Q3 is September 15th, and then January 15, 2027 is when the deadline for Q4 is due. Again, this is for estimated tax payments for individual taxpayers. Now, if you are a C corporation, again, this is very important to note. C corporations, the Q4 estimated tax payments, that is due on December 15th. So again, Q4 2026 estimated tax payment is due on December 15th of 2026. Again, if you have any questions, obviously call your advisor, call your accountant, but make sure that these deadlines are met, because that way, if you meet these deadlines, you will avoid penalties for not paying your taxes on time. So don't automatically assume that the estimated tax payment you calculated 6 months ago, 9 months ago, is still the same. So again, as tax advisors, we work with our clients throughout the year. So we make a projection throughout the year, but then something might change in the year. Your revenue might skyrocket, and then you have to actually start making higher estimated tax payments. Or it could be the opposite. Your revenue might drop. And then if you were making a certain amount for estimated tax payments, maybe you don't need to make that much for Q3 and Q4. So that's why it is very important that you work with your advisor throughout the year, that you follow these projections and make the adjustments as needed. So again, we already spoke about the tax filing deadlines that are coming up, September 15th and October 15th. And I just spoke to you about the 2026 quotes. Therefore, the current year estimated tax payments that if you know that you're going to have a tax liability throughout the year, you have to make during the year to avoid penalties. Okay. So again, third quarter estimated tax payments is due September 15th. Fourth quarter estimates are due for individuals, January 15, 2027, and for C corporations, December 15th, 2026. Again, the goal is not simply to avoid penalties, is to manage cash flow and taxes intentionally. Again, the goal is to manage cash flow and taxes intentionally. That's why you have to work with your advisor throughout the year. So if you are definitely allowed, obviously, to make adjustments as needed. Everybody's different. If you have a friend that owns a business, their business might have completely different numbers, completely different scenarios than theirs. So you have to focus on yours, and you should definitely be working with a tax advisor to look through the projections. And again, the tax advisor will also remind you of these dates. We definitely do that with our clients. I just had a meeting with a client today, and I told him, your business is doing really well this year. We have to make sure that we make an estimated tax payment in September and then again in January. In this case, he's an individual. Okay. Again, why these deadlines matter. You avoid unnecessary penalties and interest. For me, that's really the minimum. Compliance is important, of course, but you need to file your returns and make your payments on time. Again, this is very important. You need to file your returns on time and you need to make your payments on time. You don't want to pay for penalties on something that you really had. If you file an extension, you really had 6 months to file um, the final tax return. So that's plenty of time to finalize your numbers for prior year, to meet with your accountant, and then have them actually file your tax returns. So there's no need for you to incur in other expenses like penalties or interest if you don't have to. Now, if you're a business owner or a high income individual or professional paying a significant amount in taxes every year, simply being compliant is not enough. Again, you should understand your projected tax liability. And you don't need to do this by yourself. You should be working with a tax advisor on that portion because we will guide you through that. You should have a plan before the year is over. Again, and I cannot say this enough. Every high earner individual or business owner should have a tax plan. Again, it is very important. You should only pay the taxes that are absolutely necessary for you to pay. Do not give money away because you didn't take the time to sit down with your accountant to do planning. Planning is key. Planning is super, super important. The goal is to manage your taxes and your cash flow intentionally. Again, I said this earlier, manage your cash flow and manage your taxes. These are items that your advisor will definitely work with you through. At Upfront CPA, we are not tax preparers. Again, we are your advisors. Okay. Don't file, just plan. So we're not simply waiting for our clients to send us the information when the time comes to file and file the returns, and that's it. That's not what we do. And again, this is something that you should be thinking about. If you're not currently working with a tax advisor throughout the year, you need to start now. First, in our case, we want to look at what's happening with our clients financially. Then we plan by projecting the tax liability and we identify strategies. Again, that's our job. Sit down, work over, look at the numbers with you and strategize. What can be done to lower that tax liability? Again, because if you consistently find yourself sitting with your accountant in March and April and saying, wow, why do I owe this much in taxes? Because you didn't plan it correctly, right? The tax liability that you have at the end of the year should not be a surprise. You should expect it, and then you should do something about it the current year. So if you have an extended S corporation or partnership return, remember September 15th is the deadline coming up. If you have an extended individual return or calendar C corporation, October 15th is the deadline. If you're making estimated payments, the next estimated payment is due September 15th, January 17th for 2027 for individuals, or December 15th, 2026 for C corporations. And most importantly, if your income has increased, your business is having a great year, you have or you had a major financial transaction, or you're simply concerned about paying too much in taxes, don't wait until tax season starts to start the conversation with your advisor. The conversation with your advisor needs to start today. Again, my name is Carla Calderera, managing partner of Upfront CPA. If you found this video helpful, please click the thumbs up and make sure that you follow us on our YouTube channel.